Hello and welcome to Geopolitics and Business Briefing, the series where we unpack major geopolitical developments and what they mean for global business, together with the experts who analyze them every day. I am Teresa Terza, and today we are looking at the war in Iran and the situation around the Strait of Hormuz, but from a business angle that goes beyond the usual headlines. My colleague Bastian Dürr recently wrote an analysis for our Geolytics Hub, taking a close look at commodity supply shocks that go beyond energy. And that's what we want to dig into, what this means for supply chains, input costs, and inflation risk. Bastian, very warm welcome. It's great to have you in the briefing room.
Oh, thanks for having me.
So, you're watching the situation in Iran and the region closely. Can you tell us a bit, where do things stand right now?
Well, right now, let's start with the supply chain angle there. So the key pivot point is the Strait of Hormuz, and that's still effectively closed, practically closed. So the traffic is, I think, 97% down on average since the conflict began. We see that Iran has selectively let some tankers through. There's some reports about them charging a $2 million fee per ship and only letting ships through that are not associated with US, Israel, and their allies or other NATO countries, of course, or other countries considered allies, but effectively the strait is still closed. And right now the conflict is in a very tricky state because the Trump administration is considering to escalate with ground troops. So they're preparing for a amphibious assault of the islands. So there's basically the main island is Karg Island, which is the main energy export hub. And then there's also islands in the Strait of Hormuz and near the Strait of Hormuz. So they're preparing units for this amphibious assault, but it's not clear whether this is just supposed to be leverage for negotiations or if they actually decide to escalate and try to seize these islands and expecting that this could end the conflict by putting enough pressure on Iran. Meanwhile, the Iranian side is not giving in at all. So there's really no signs that they are going to accept conditions for a ceasefire by the US. So the Trump administration, they keep claiming that there's negotiations and these negotiations are progressing very well. And the Iranian side is, they even gave some gifts, apparently, in the form of letting ships through the Strait of Hormuz as a gift to the negotiators, the US side. Iran has explicitly denied all these claims of negotiation. So we don't really know what is true right now. It seems that the US is overstating the extent of these negotiations to keep the price of oil down, to keep the equity markets afloat. So this is one motive. There's also the question of who are they actually negotiating with, who's in charge, who can actually stop this conflict. This is an open question. So a lot of moving parts here, as you see already, but focusing on the supply chains, the main question is the Strait of Hormuz, is it open or is it closed? If it's effectively closed and it's not reopened within 2 to 3 weeks, we will see an absolute supply chain disaster. I mean, it's hard to really describe how bad this situation could get and how much worse it could get if there's an amphibious assault and the Iranians retaliate in the way that they threaten.
Now we are seeing all the headlines, and at the moment it's all about oil prices, and so on. But in your analysis, you argue that this crisis is not just about oil. So why do you think the business impact goes far beyond energy markets at the moment?
Well, there's two things. One is all these byproducts of oil and gas production. So, for example, sulfur, which is the input to make sulfuric acid. That's usually most of it is produced as a byproduct of in oil fields and oil production, and this is really used across different industries that are essential. So we have it in the mining sector to produce metals, copper, nickel. You need sulfuric acid to extract also for processing. You need it for a whole host of chemical processes. So that's one example where you really see this ripple through effect, because it's really the upstream part of the supply chain that gets disrupted here. And sulfur is just one example. We also have helium, where you have around a third of global supply coming from Qatar as a byproduct of the natural gas fields. And obviously there's nothing coming from that side. So you already have the shortages impending for helium. The good thing about helium is that you can store it almost indefinitely. It's also used for welding. So working with metals in the construction industry, they need helium for cooling systems in data centers. So this is where helium is also used. These sectors will, of course, bid up. They're already bidding up the price. The price already doubled since the conflict, more than doubled, I think, by now.
Is it only like the prices going up, or are the effects already there? So do these sectors feel the impact already?
They still have stockpiles of it. So, for example, the semiconductor industry, I haven't heard of any concrete that they have to shut down production because of a lack of helium, and they will probably do everything they can right now to secure supplies. I mean, they still have stockpiles of it, and it will probably depend on which industry this has the lowest margin impact. So semiconductors, of course, helium is a very small part of their overall production cost. So they will, even if the helium price goes up tenfold, they will just pay tenfold. Other industries might not be able to absorb that impact on their margins, and they might not be. I mean, somebody will be left out. If you take off a third of supply from global markets, somebody will not get the product, of course. So whoever cannot pay it doesn't get it. So probably the children's birthday parties will have to go without balloons for a while if this shortage keeps going. Actually, it sounds funny, but it's I think around 10% is actually for balloons of helium. Global helium demand is actually to make balloons float, because there's really no substitute. That's the first part of the demand that doesn't get the supply, because it's not essential. It's all dependent. How long does the Strait of Hormuz stay closed?
Yeah, you stressed that these disruptions are hard to manage quickly, and nobody knows how long the situation is going to persist. So what makes these shortages now so difficult to offset?
Well, it really depends on spare capacity. So how fast can you drive up production elsewhere? And this is really a function of the production process itself. So do you have to build a new refinery to ramp up production? Because for byproducts, it's not really that they're involuntarily produced. It's a byproduct of refining or of extracting hydrocarbons. So there's really no spare capacity there, because it's already produced in refineries that are there. And to really ramp up through dedicated production, it could take years. So it really depends on the individual industry and the individual product, how fast you can make up for that supply, or it can also depend on how easily it can be stored. So for helium, these firms have prepared, of course. I mean, TSMC, they're not stupid. Of course, they know that there's a risk to helium supply chains if it's from the Middle East. So they have diversified supply chains. They also have stockpiles of it to weather the storm. But if this keeps going for months, you will have a shortage, and some industries might not be able to secure supply, or the price is already skyrocketing. So this is something across markets, though. It's not just for helium, it's also the sulfur, the fertilizer inputs. So sulfur is used for fertilizer, also for phosphate-based fertilizers. And these are really critical for agricultural industry. So you take 20-25% of the supply of the market, you will have an impact on food prices. You might even have food shortages as a result. You also have ammonia that is produced in the Gulf region that is used for nitrogen fertilizers. So you have a double shock for the fertilizer industry, and we will have to see how this goes. And urea is also critical in that aspect to produce fertilizer.
And in your analysis, you come to the conclusion that this could actually and very likely turn into a global inflation shock. How did you get to that conclusion, and why do you consider this outcome as likely based on what you're seeing?
Well, some of it is already baked in the cake, you could say, because we already had this Hormuz now closed for almost 5 weeks. Nobody expected this in the beginning of the conflict. I think the Goldman Sachs made a prediction of, in 5 days this will be reopened because the damage is just too large. So they have to de-escalate. But this has been going on for roughly 5 weeks now, almost. And we already see disruptions. So the first sort of domino to fall right now is the fuel, of course, fuel supplies in Asia. So we already see rationing at gas stations or general rationing for fuel, for diesel. We also see export restrictions by China and Thailand. And this makes other countries in Asia that depend on these refined products, that's really causing the shortages right now. That's one domino that's already falling. We have the petrochemicals industry. So this is also something that we can mention aside the energy complex. Very big petrochemicals, ethylene, polymers for plastics. These are already being disrupted. So we already have several large petrochemical plants that have shut down production, either partially or fully across Asia. So we will see a price impact for sure. I mean, for plastics, this is already happening. That the prices are, I think, already 3 weeks ago, it was around 20% spikes for spot markets. And these are not shipping through the Strait, or very little comes through the Strait of Hormuz. So this is already a disruption happening right now for petrochemicals. We already see some impacts on fertilizer plants. We already have reports of mines, so in the mining industry, metals extraction, sulfuric acid shortages. Diesel shortages is also, this is the energy complex again, but this is, you need huge amounts of diesel to extract minerals, produce metals, agriculture. So this is really a giant supply chain shock across virtually every industry. And it's very difficult to see how this would not turn into an absolute catastrophe if they don't reopen the strait very soon. So this is really, the clock is really ticking. If it's closed for another 4 weeks, I think we will have it will probably make COVID and the Ukraine war look mild by comparison.
It's really hard to accept living in such a situation. And I think for businesses, it's so difficult to plan in these times.
I think that's one thing I should stress. It's not the base case scenario, neither of most observers, analysts, or the markets. If you look at the stock market, it's down roughly, depending on the region, it's down 10%. US markets, I think, even less than 10%. Because it's such a nightmare scenario that most think that they have to de-escalate. And this is, I would say, it's also my base case scenario, that it's not going to be the full escalation, but it is on the table. Yeah. And even if the chance is lower than the base case, really companies should consider this, because it's just a real catastrophe scenario that by all means, maybe they can avoid it, but maybe they can't. Maybe the Trump administration calculates we do have a chance if we escalate that we shut this war down and we control the Strait of Hormuz, and maybe they can't. So it should really be on the agenda to check, if this worst case scenario comes, how are we prepared? Because this will not just be a supply chain shock. This will be a global economic crisis. It's hard to see how there wouldn't be sovereign debt crises if this turns into a global recession, because you have inflation at the same time as growth goes down, and then the debt to GDP ratios go out of control, borrowing costs increase. So this is a whole host of ripple effects that could happen if they don't get it under control. So the key factor, I would say, watch the Strait of Hormuz. Take the Trump administration's claims of negotiations with a giant grain of salt. And it all depends on, can they get the Strait of Hormuz back opened or not? And how are the energy facilities? Will there be more destruction of the energy facilities or not?
Got it. So, Bastian, thanks for explaining why this situation matters for businesses far beyond energy markets, and how these supply shocks in industrial inputs can actually ripple through across sectors. Thanks for listening to the Geopolitics and Business Briefing. If you would like to follow up on anything you heard today, don't hesitate to reach out via email to podcast@geo-lytics.com. And we'll be back soon for further, hopefully more positive updates in the briefing room soon.